So very good evening, friends. Hope your DT revision is going on full swing. Let's quickly take a look at the recent cases which will be very handy for you, relevant for May 2026. So the first one is you will be given this facts of the case as the question, and you need to apply the various analysis and give your conclusion. So the first case is the assessing officer. The scenario will be the AO has disallowed rupees 24.74 lakhs on the ground that employee share of EPF and ESI was deposited belatedly, and also tribunal allowed the decision holding that amount was paid before the due date. So whether subsequent ruling of the court can be a ground for invoking provision of section 254.2 by the tribunal to rectify its own order. This will be the question you might get. So what are the key terms you are expected to reproduce in this is, first one is uh, based on the high court, based on, if possible, try to reproduce these cases which are very handy, relying on its earlier division bench ruling, that is Infantry Security and Facilities or ITO. So they held that a subsequent judgment even of the Supreme Court cannot by itself form the basis for rectification under section 254.2. Such rectification is limited to apparent mistakes. I repeat, this has to be reproduced if you want full 4 out of 4 marks, especially in question 5. Such rectification is limited to apparent mistakes and does not extend to reviewing or reconsidering decisions based on subsequent legal developments. So hence the IT80's rectification order was found to be without jurisdiction. This is what expected from you, very straightforward only, but only thing is you need to recall it. Make sure to watch this video 2 times today, and quickly, like when you take a break tomorrow, once you can go through this. So moving on to the next one is the assessee has filed its return of income in ITR 6 for assessing your assessment year 22-23, declaring the total income at rupees 9,54,872, but inadvertently failed to include certain figures in P&L under Part A, and this led to the assessed total income being determined at 3.58 crores instead of the correct amount of 9,54,872, so resulting in a tax demand of 1.02 crores. So whether an inadvertent omission in the income tax return can be rectified by the principal commissioner under section 264 of the Income Tax Act. This is the case. So now let's quickly take a look at what exactly is expected from you in this question. So the High Court held that under the scheme of section 254, the revisional authority is empowered to grant relief even in cases where the mistake is committed by the assessee. This is very, very important. I repeat, in section 264, the revisional authority is empowered to grant relief even in cases where the mistake is committed by the assessee. So citing the consistent view of the various high courts, the court observed that such bona fide, I repeat, such bona fide mistakes are rectifiable under section 264, because these are the legal related questions. These are key terms you have to reproduce. So the principal commissioner of the income tax erred in rejecting the petition without considering the principle. So the matter was remanded back for reconsideration in light of this above observation. This is regarding to the first 2 cases. So moving on to the next one. The appellant, a non-resident company incorporated in France, engaged in oil drilling activities, added 10. This case is all the way more important, so pay full attention. Compared to the above 2, this is equally important, but even more important, a lot of more chances. So add a 10-year contract for drilling operations in offshore Mumbai from 1983 to 1993, and obtained another drilling contract in October 1998. So during the intervening years, it carried on business correspondence with ONGC from abroad and submitted a bid for oil exploration 1996. So during this period, it incurred various administrative audit expenses and filed nil return of income, wherein only interest on income tax and setup was claimed and against the said income. So then the question is whether mere failure to obtain a business contract by itself would be sufficient to hold that the assessee had ceased its business activities in India. This is the question. So now what is expected from you in this case is the Supreme Court, that is the Apex Court, observed that during the intervening years, the non-resident company had continuous business correspondence with the ONGC with regarding to hiring of manpower and regarding the expert key personnel for drilling in deep waters, and even unsuccessfully submitted a bid in 1980. So the tribunal rightfully noted that a business going through lean period of transition, and the apex court held that inference that the assessee could not be said to be carried on business because it did not have a permanent establishment and correspondence with the ONGC from the Foreign Office, so was wholly fallacious and contrary to the very scheme of the act, which did not require a non-resident company to have a PE within the country to charge any income tax to within the country to be chargeable to tax on any income accruing in India. So the apex court also held that in an era of globalization whose lifeblood is transnational trade and commerce. So high court's restrictive interpretation, I repeat, high court's restrictive interpretation that a non-resident company making business communication with an Indian entity from the foreign office cannot be construed to be carrying on business in India is wholly anachronistic with India's commitment to sustainable development. So hence the Supreme Court allowed the appeals and held that held that appellant could be regarded as carrying on business in India and was therefore entitled to deduction of business expense as well as carry forward instead of a unabsorbed depreciation. If you write all these things, there is no way you lose a single mark on this kind of questions. So moving on to the last one, whether subscript whether subscription fees received for providing access to customer to a CRM application to Indian customers is taxable in India as royalty under Section 9 of the Act. So this is the last question. So in this case, if you see, the High Court held that since the copyright in the application was never transferred nor vested to the subscriber, the fee is not accessible under Section 9 of Income Tax Act. And also since the customer was merely, I repeat, customers was merely accorded access to the application and he took advantage of the analytical attributes of the software by providing requisites, the subscription fee would not fall within the ambit of fee for technical services under Article 12(4)(b). These are the two reasons why it is not covered. You have to reproduce. So first, second is the subscription fee not covered, and the first is the High Court alleged since copyright is in the application was never transferred, the fee is not applicable. First is regarding the fee, next second is with regarding to subscription aspect. So lastly, Supreme Court held that on a petition for special leave to appeal, it did not interfere with the decision of the High Court, and it hence concluded that the ruling of the Delhi High Court attained finality. That is it. This is the answer for this question. First and third is very, very important. Make full use of it. Keep going. All the best wishes. Everything is going to go your way. Make sure to time your presentation properly. That is very, very important. So keep these things in mind. All the very best.